Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's keep up with our gold analysis. So actually what we have discussed in the euro today, the same story we have in the gold. Yesterday we also said that be aware of the upper direction. So currently overall price action looks not typical for normal bearish market. So if market indeed stands bearish, it should show the price action that stands differently. With the more action to the downside, it should be faster and it should start also faster. Not as long as market was standing in some consolidation. You could just, as I said already, take a look at any bearish action and the points of the reversal, how fast they are and how straightforward downward action usually stands. I already explained this phenomenon, why this happens usually. And currently here, as we discussed yesterday, this was absolutely different type of action. And on a daily chart, you could see that we already have talked about this. Potentially the market is moving with the butterfly pattern. And even on this right wing of this butterfly, you will see some acceleration. Market is not at overbought here, so it has ability to keep going higher. And as we said, major pullback could start when the market hits the 18 even area, near the major fib level. It's around 1790, 18 even. So right there will be the major resistance area. I personally still hope that we could get some kind of the hand and shoulders pattern here. This could put the foundation for the major reversal on the gold in the near term. It's probably next year, but relatively soon. So the reversal mostly has been triggered by the comments from the Jerome Powell. He said nothing actually new compared to the Fed minutes, mostly confirmed the same thing. And I already explained in the euro video that mostly markets are catching the points that stand on the surface, but absolutely do not want to think and trying to dig it a bit deeper to understand the reasons for this decision. So currently widely accepted the idea that Fed should a bit slow down with the rate change or even to take the pause in the rate change. But if you people understand why it's going on, this is absolutely not because of the defeating of the inflation, normalizing of the markets, improving the economic situation, and strong job market and consumption. Absolutely not. This is just because the Fed is scaring. They are frightened. They are frightened to repeat the scenario of the beginning of the century, the Great Depression, because it will be, if in the Great Depression it was deflationary crisis, now we will get the inflationary crisis. And they actually already see the first signs of the degradation of the national economy and production, a real sector of the economy. Because drop of the inflation is not always the good sign. It might be the sign of the destruction processes in a real sector of the economy, and they are frightened right now. They see no fruits of the rate change, and they have decided to wait a bit and see what will happen. So currently, this big question, actually, I would say that's major driving factor, how durable the effect will be of the recent Jerome Powell speech. So I would suggest that if tomorrow we will get relatively positive payrolls, that will be great, and this target probably will be achieved. So this should actually sufficient effect of this speech to support gold in the short term and let them to complete the major target. So I would say in this way. So on the 4 time frame chart, market just has confirmed our suggestion. So when we said let's take a look on this pullback, this happens after the OP. We said after that market has to drop if it bearish, but hasn't happened. And we yesterday said that looks suspicious and called to not take any short position by far. Then minor grabber has been formed here. Market right now is coming to the top, is ready to challenge it. So I think that we could go with this butterfly that we have and with the target that we have specified. On the hourly chart, you could see our consolidation has been broken up. Here we just, if you would like to take the long position, you could consider the few levels. So first level, this obviously stands around 1770. nearest fib support that you could consider for position taking. And next is a rather strong support area, 1760, 1761. It's also accompanied with this natural support resistance zone. As you can see, previously it was resistance, 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 breaking up. Now it will be support. So this is very comfortable area below 1759 to hide the stop if you intend to take the long position. So in general speaking, bullish setup will be valid until this thrust is also valid. So market should not return right back down and taking out of the 1745 lows. It should not erase recent thrusting action. This is a vital moment in this short-term context. But actually, normally, this should be enough. So 1759 level confidence area should be enough to understand whether the market is bullish or not. So these levels also should not be broken if market is indeed stands bullish, because no reasons for a downside breakout for a bullish market here exist. It's market not at the target, market not at the strong resistance. Thrusting actions just has started, so literally there's no reasons from technical point of view of any breakout if market indeed stands bullish. So for the bears, of course, as I said, nothing to do but for waiting for 18 even target, and then we will see. If this head and shoulder starts, then we could try to take the short-term bearish position with a possible pullback somewhere to the 17 even area. So that theoretically what should happen. Actually, this will be the bread and butter trade, guys, on the monthly chart that we discussed. Yes, not only on the currency market, but in the gold markets also have a kind of the bread and butter setup. So let's keep watching, and most interesting, what will happen tomorrow on the payrolls report.